When conflict unveils the currency's true nature, beneath the immediate tremors of geopolitical tension, we discern a deeper current, the relentless erosion of purchasing power. This is not merely a market reaction, but a fundamental reevaluation of value, where the scarcity of true assets speaks louder than the promises of paper. We watch the world, don't we? The headlines scream of conflict, of borders shifting and alliances straining. And in the markets, you see the immediate tremor, the flight from risk, the surge in the price of oil, the momentary dip in assets once deemed speculative. It is a natural, almost instinctual, human response to uncertainty. To pull back, to seek the familiar, to brace for impact. But what if this visible chaos is merely the surface ripple, revealing a far deeper, more predictable current beneath? For a moment, the market behaves as it always has, a collective gasp, a scramble for perceived safety. Bitcoin, too, feels this initial pressure, a temporary reevaluation as the immediate future clouds with doubt. The broader indices, the S&P 500, they too reflect this collective hesitation, this sudden pause in the relentless pursuit of growth. But we must ask ourselves, what is truly being de-risked? Is it merely the immediate exposure to volatile assets, or is it a subconscious, yet profound reassessment of the very foundation upon which our wealth is built? Consider the nature of this conflict. It is not merely a clash of nations, but a stress test on the global economic order. Governments, already burdened by debts that stretch beyond the horizon of their economic output, find themselves facing new, immense demands. Wars, you see, are expensive. They consume resources, divert labor, and demand immediate, substantial funding. And when the tax base cannot provide, when the coffers are empty, what recourse remains for those who hold the reins of monetary power? This is where the true nature of our monetary system is laid bare. When revenue falls short and spending cannot be curtailed, the path of least resistance for a sovereign entity is often the printing press. Not the literal press, perhaps, but the digital equivalent, the creation of new currency units through bond purchases, through quantitative easing, through the subtle, insidious expansion of credit. This is not a secret. It is a mechanism, a tool, wielded with increasing frequency in times of perceived crisis. And what is the consequence of this expansion? It is the dilution of purchasing power. It is the quiet, almost imperceptible, erosion of the value of every unit of currency you hold. We call this debasement. It is not a sudden collapse, but a gradual, relentless decline, like sand slipping through an hourglass. You feel it in the rising cost of goods, in the diminishing returns of your savings, in the constant need to earn more just to maintain the same standard of living. This is the debasement trade in its purest form. It is not a speculative gamble, but a rational response to an observable economic reality. Individuals, acting in their own self-interest, seek refuge from this erosion. They rotate their wealth not into assets that promise exponential growth, but into assets that promise preservation. Assets that cannot be conjured into existence by decree, assets whose supply is fixed, whose scarcity is undeniable. Historically, gold has been the primary sanctuary in such time. Its ancient luster, its tangible weight, its millennia-long history as a store of value. These attributes have made it the default choice for those seeking to escape the fiat illusion. And indeed, we have seen gold's ascent over the past year, a silent testament to the growing unease with the stability of paper currencies. Its price movement is not a reflection of its utility, but of its role as a mirror, reflecting the fear of monetary decay. But what about Bitcoin? You observe its initial dip, its correlation with broader market sentiment, and you might wonder if it truly belongs in this category of scarce asset. Yet, we must look beyond the immediate noise, beyond the short-term volatility that often accompanies nascent markets. Bitcoin, unlike gold, is not merely scarce, it is absolutely scarce. Its supply is mathematically fixed, immutable, beyond the reach of any central bank or government decree. This absolute scarcity, combined with its decentralized nature, makes Bitcoin a unique proposition in an era of escalating geopolitical and monetary instability. It is not tied to any nation-state, any central authority, any single point of failure. It is a network of distributed trust, a ledger of value that cannot be censored, seized, or inflated away. It is, in essence, the ultimate expression of individual sovereignty in the digital age. Do we truly believe that a system built on endless expansion can withstand the relentless pressure of reality? The very structure of our current financial system, with its reliance on credit expansion and debt monetization, is inherently fragile. When the illusion of growth can no longer mask the underlying insolvency, the system seeks an escape valve. And that escape valve, more often than not, is the further debasement of the currency. Consider the pronouncements from central banks. During times of geopolitical stress, the historical pattern is clear: a shift towards a more dovish stance, an easing of liquidity, a willingness to support asset prices. This is not a benevolent act. It is a strategic maneuver to prevent systemic collapse, to maintain the illusion of stability. But every such maneuver comes at a cost, a hidden tax levied upon the purchasing power of every citizen. It is a transfer of wealth, subtle yet profound, from the prudent saver to the indebted state. This is why the initial market reaction, the de-risking, the temporary dip in Bitcoin's price can be misleading. It is the first wave, the immediate emotional response. But the second wave, the deeper, more rational response to the unfolding reality of debasement, is where Bitcoin's true strength emerges. When the dust settles and the true cost of conflict is tallied, the demand for truly scarce, truly sovereign assets will only intensify. Bitcoin's journey has been one of constant re-evaluation. From its early days as a curiosity to its current status as a significant global asset, it has weathered countless storms. Each dip, each moment of doubt, has been a test, a crucible that has only strengthened its resolve and revealed its fundamental resilience. To see it as merely oversold is to miss the deeper narrative. It is to overlook its role as a beacon in a world increasingly adrift from sound money principles. The market, in its infinite wisdom, is a mirror. It reflects not just our hopes and fears, but the underlying economic truths that govern our action. The flight to gold, and increasingly to Bitcoin, is not a fad. It is a collective, spontaneous coordination of individuals seeking to preserve the fruits of their labor. It is a testament to the dispersed knowledge within the market, where millions of individual decisions, driven by the same fundamental economic calculus, converge on a shared understanding of value. What then does this mean for you? It means understanding the game being played. It means recognizing that the rules of money are not static, but are constantly being rewritten by those in power. It means seeing beyond the headlines, beyond the immediate fluctuations, to the underlying forces that shape our economic reality. It means asking yourself, where will true value reside when the promises of paper begin to fray? The question isn't what Bitcoin is worth in this moment of conflict. The question is what it represents in the long arc of human action, in the ceaseless pursuit of meaning through exchange, in the enduring quest for a store of value that transcends the whims of states and the illusions of central banks. It is a question of sovereignty, of freedom, of the very nature of trust in a world that increasingly demands it be decentralized. The echoes of conflict will fade, as all human endeavors eventually do. But the lessons they imprint upon the ledger of our collective memory, the truths they reveal about the nature of value, and the fragility of trust, these will remain. We are left, then, with a choice: to cling to the illusion, or to embrace the clarity that scarcity alone can offer. Perhaps, in this quiet understanding, you find a resonance that speaks to a truth you've always known, a truth worth holding, worth sharing. We are Block's son. We don't predict the market, we read its memory.